Hi, Assalamualaikum warahmatullahi wabarakatuh. Today I want to present about the public taxation with my group members, which is Muhammad Adam Khairil dan Muhammad Faizan. I want to introduce about the public taxation. In Malaysia, the tax was the income to the government as a revenue and build the economy. It have many taxes in Malaysia, for example, income tax, business tax, petroleum tax, and duty stamp tax. Inland Revenue Board, which is IRB, was the main revenue collecting agencies under the MOF. IRB was established in accordance with the Inland Revenue Board of Malaysia Acts, to giving it more autonomy, especially in the financial and personal management, as well as to improve the quality and effectiveness of the tax administration. In almost every country in the world, taxes are lying primarily to raise revenue for government spending, although they also serve other purposes. Taxes are most important source of the government revenue in the modern economy. On a territorial basis, income tax is exposed. Individuals are taxed in income accruing to or derived from Malaysia, whether they are resident or non-resident in Malaysia. Malaysia has an assessment baseline for the current year, the base period for the evaluation year with the calendar year. Malaysia's official currency is the Malaysian ringgit. Present about the tax base and the tax rate. The tax base is the total amount of the income, property, asset, consumptions, transaction, or other economic activities subject to the taxation by the tax authority. Furthermore, the tax rate are the percentage at which an individual or corporation are being taxed. They have the difference between the tax rate individuals, company, and sole proprietorship or partnership. For the tax rate company, Malaysian corporate income tax applies to both resident and non-resident business. In the tax rates for sole proprietorship or partnership would be dependent on an individual tax rate. In the case of the sole ownership, his or her individual income is corporate taxable income, whereas the chargeable income is distributed among the partners as an entity in the partnership. The second topic is a direct tax and indirect tax. The tax structure in Malaysia can be classified into two main categories, which is a direct tax and indirect tax. Direct tax is known as a tax that is live directly on the taxpayer and is to be paid to the government. Some of the direct tax in Malaysia is subject to the income tax and corporate tax. Income tax is the tax applied to the income received by the taxpayer or the individuals, while the corporate tax is the tax that applies to the income that business receives from their enterprise. Furthermore, the indirect tax are the tax imposed not on revenue, benefit, or income, but on the taxpayer goods and services. Indirect tax may be transferred from one person to another, unlike direct tax. Yearly service tax, sales tax, central exercise duty, and costume duty were included in the list of indirect tax on taxpayer. However, with the introduction of the goods and services tax, which means GST system on 1 July 2017, all forms of indirect tax by state and central government on goods and services have been replaced. There are some benefits for the indirect tax, which is collection was easy. If you want to know what the difference between the direct and indirect tax is, the main how they are charged. The collection is simple. There are no paperwork or complicated process involved in paying indirect tax, unlike direct tax. You are expected to pay the right to tax when you are buying the good or services. A small amount of GST is already included in the price when you buy a good or services, and this makes the purchase more convenient for the taxpayer.
Practical implementation for tax system. In effort to boost voluntary tax enforcement, it is important to reduce the tax complexity faced by many corporate taxpayers. Reducing the burden on taxpayers can promote enforcement and reduce compliance or costs. It is therefore recommended that IRBM give priority to simplifying the preparation of tax estimate, standardizing procedure for record keeping, and formulating clearer tax legislation to eliminate tax uncertainty. In order to reduce the burden on corporate taxpayers of calculating income tax payable, the IRBM could likely implement simpler rules as adopted by the Australian Taxation Office. First, the IRBM will recommend offering option for corporate taxpayers to decide the approximate sum of their installment payment. The approximate amount shall be calculated by the IRBM on the basis of the previous tax returns of the taxpayers or by the taxpayers on the basis of the notified IRBM rate. The first choice would not ask corporate taxpayers to decide how much they have to pay. It is easy and sufficient for small corporate taxpayers with an annual income of less than 5 million. In the other hand, the second option helps corporate taxpayers as installment payment are dependent on income received, helping to control the company cash flow of the as a tax installment are most closely associated with change in business income. With both choice, corporate taxpayers may vary installment payment if the amount of or rate reported by the IRBM result in them paying more or less than the expected tax liability. These two options provide corporate taxpayers with greater flexibility in compliance with their tax obligation. Second, the IRBM should consider reducing the frequency of installment payment. Currently, Malaysia corporate taxpayers pay in 12 monthly installment, which is payable on the 10th of each month. Any late payment result in a penalty of 10% of the installment sum. This proposal remains a viable choice which is implemented will make it much simpler and more effective for tax auditors to conduct their duties, since they will be familiar with the frameworks used by taxpayers. Finally, resolving the problem of uncertainty in tax rule will likely result in the fairer and more correct level of overall enforcement and lower overall compliance costs. Having official decision and recommendation available will help ensure greater continuity and greater certainty for taxpayers. However, appropriate steps should be taken to ensure that these public decisions and rules do not lead corporate taxpayers to a more challenging role than they already have. Vision. Developing countries face enormous challenge in trying to establish effective and efficient tax structure. As summarized by Vito Tenzi, the leading expert on these topics, all developing countries must fix four fundamental problems. First, the structure of the economy, which make it difficult to enforce and collect taxes. Next, the restricted potential for tax administration. Third, the low standard of basic data. And last but not least, in many developing countries, the fact that the political setup is less suited to sound tax policy than it is in industrial countries. Developing economic structure. Developing countries have well-known economic characteristics. Significant proportion of total economic production and employment are focused on agriculture. They have relatively large informal markets, entrepreneurial units are small and multiple. Wages represent a relatively small share of total national income and a relatively small share of total consumer spending is being spent in large modern establishment. The scale of the informal sector plays an important role. Not only does it minimize the likelihood of relying on such modern taxes, such as personal income tax at individual level or value-added taxes at wholesale, retail and consumer level, but it also makes it more difficult to meet those with economic potential to pay taxes. Most of the literature on tax policy in developed countries appears to concentrate on broad tax-paying units fighting tax avoidance and tax evasion and the formal economy. Although policy experts who address specific problems created by relatively broad informal sector of the economy vary in their views about exactly what needs to be done about this different in the tax basis of developed countries. They accept that the informal sector need to be included in the documentary method and that some sort of presumptive taxation might be the best way to begin collecting revenues from the best documented sector. Administration of tax and records. The second problem facing tax policy in developed countries is the lack of successful tax administration. Administration face a significant challenge since a large proportion of the population in on a subsistence basis. Many taxpayers do not keep records, and even when records are kept, they are not generally accurate. Taxpayers' cooperation is also poor due persistent shortage of qualified officials, corruption tradition, and lack of noticeable change in government service. As a result, countries frequently develop tax structure that leverage whatever obvious revenue generating option they have rather than creating a modern and effective tax system to build a large tax base from which to extract revenue. As a result, many developing countries frequently end up to many small source of revenue, too much dependency on foreign trade taxes, and relatively small use of personal income tax. The problem facing developed countries are made abundantly clear by comparing the administrative proposal by the International Monetary Fund (IMF) with the realities of developing countries.
The tax is crucial part of our country revenue and is the main resources to our income. Then it's important to evaluate our current tax to improve our collection of the tax. There is several suggestions to improve our current tax collecting method. First is to revise our tax rate. It can be done by gathering the data from LHDN, Lembaga Hasil Dalam Negeri, PBT, pihak berkuasa tempatan, and custom department. Tax rate can be revised on the percentage rate. As example, on the import activities, customs already collected from 5% to 10% tax of rate on every goods and trade item that amounting more than 500. Every item with the tax rate of 5%, we can be increased by 6% to 7%. As example, electronic device and watch. This suggestion need to be taken to the higher level in finance ministry so that the current act can be amended in the parliament. Next is to charge a tax based on item that demanded by the people. As example, electronic cigarette, or we can call it as a vape. Due to higher demand from the customer, government aware and already imposed the tax for the liquid of electronic cigarette itself. Second, we need to ensure a regular update of the taxpayer registry. It is difficult to maintain an accurate central taxpayer registry, plus tax authority that lack the internal control necessary ensure that such are entitled to stay within the system. So the registration should be met with more rigorous and feedback system introduced to ensure that the taxpayer regularly update their information. Other than that, quick and simple control can be put in place to raise the alarm if taxpayer fail to comply with their obligation. Third is using electronic for simple transaction. As an example, nowadays QR code payment transaction is being using widely over the world, so that the tax collector can use it as a method to make it easier. Tax administration can introduce electronic platforms such as internet portal, mobile payment, JomPay, and ATM. It will encourage the level of taxpayer and increase the taxpayer voluntarily to do so. As a tax administrator, they need come with various communication process such as television ads and informative message to deliver the message how important the tax payer to our country's development. It can be done by appeals with emotional element. As example, what will happen of our educational system and head department if the taxpayer is avoid to pay the tax. The effective communication can promote voluntary compliance. Last, we also need to upgrade our facility in order to avoid any leakage of the income. As example, we need to increase our facility system, such as improve staff allocation by adding up more staff, because average of the form of the tax can be reached over 3,000 average per day, and our assessment officer is around 2 or 3 people at one time, so we cannot focus to do tax evaluation if the staff is not quite much. So as to develop a country, the government need to optimize the collection of revenue through the tax with the various public taxation, including direct and indirect tax. The government will be able to collect maximum tax with a proper rule and legislation. We can take a word from Abraham Lincoln, which is the government for the people, by the people, for the people, showing that the collection of the revenue is collected by the government, then it will be allocated to country development such as public transportation and educational, economical, and also head department.